Hi, welcome to the Market Alert for Thursday, the 30th of May 2024. So yesterday, bond yields soar as rate cut hopes plunge. So like I said yesterday, the narrative's changed. Stock, oil and gold all sold. Gold was sold overnight, but not by a lot, as Nvidia hit another new record high. Blimey, I think that's a $2 trillion worth company now. Treasury yields rise to month highs, weighing on stocks ahead of key data. Key data is non-farm payrolls next week. US stocks declined as yields continue to rise following another weak auction, so the auctions aren't going too well for the US either. Economic news for today, we've got Spanish CPI, that's due out, and then we've got prelim GDP, unemployment claims from the US, and pending home sales as well. We've also got the GDP price index as well. So a bit of news there to try and move the markets. Right, let's have a look at yesterday's action. The markets continue to decline as I record, so let's kick off with the Dow. So in the Dow, we've taken out the 50, 62, 78 and heading towards the 89 level now from here up to here, which is a good retracement, that's for sure. We're certainly lost a few points. We're down at the 38,000 level there, but just going through 37,963 is what we're looking for, so just below 38,000 there. 30-minute chart, you can see there was a slow gradual decline yesterday sideways into the evening, and then the market just fell out of bed. I don't know whether that's a result of the poor auctions or what, but that certainly moved the market lower, didn't it? Out of curiosity, I'm just intrigued now to see what this price bar was. Let's just draw that on there. It says here that the high to low was 322 points. That looks about right. 100, 200, 300, yeah. So, wow. I don't know what caused that. It doesn't seem to have made any of the headlines. But the market falling out of bed there, and also we're trading below yesterday's low already for this market as well. So let's move on and have a look at the German DAX. German DAX daily also moving back down as well from the all-time high, which we have at the top here at 18,921. We're through the 50, but heading towards 62. Just below 62, we have the 50 EMA. Then we've got the 78.89, but obviously not declining as fast as the Dow there, but certainly weakness around. If we go to the 30-minute, again, you can see majority are red bars. Afternoon though, the US managed to stop the rot and brought the market back, but you can see that once it broke out of that sort of triangle formation, the market down and then continuing down, and is also below yesterday's low as well. So if we go back to the daily charts, have a look where we've got, like I say, the 50 EMA is the first downside target if the market breaks the 62 there. S&P 500 leaving the all-time high behind as well at 5349.8. We're just drawing some fibs to these horizontal lines that show where the support was. You can see that we've also gone through 38, through the 50 and the 62, so the next goals are down at 78.89 and also just below 89, and on this support to the left we have the 50 EMA, so the downside target there in the S&P is 5193.5, so we'll just save this. 30-minute chart, again you can see the electronic decline, cash market prices were sideways, then following the Dow overnight, but we are below yesterday's low there as well. Speaking of being below the previous day's low, the FT100 off its all-time high of 8477.6 continues to decline, down at 89% at the moment, and just going through the 50 EMA as well. This is drawn in from the demand here to the supply, and the market struggling a bit there. So again, it would be interesting to draw in a price here, which is 8,097, so 8,100. If it breaks that, then you can expect to see lower prices there. In the 30-minute chart, we started off with a bit of a bounce, and then we've declined, and then as again overnight, you can see the market has gone through the low. Now, just because all of these markets have traded below the low overnight, don't be surprised if they try and bring them back, because that's a classic. You know, everybody wants to come in and sell, and then the markets are brought back. US dollar continues continues the last 2 days, and overnight he's green as well, has tried to move back to the upside on the prospect that there's no rate cuts coming, because that's adds value and is good for the currency. So that's why we're seeing it move up. However, let's have a look at the metals and see how it's reacting, because obviously they're inversely related, but things have changed slightly. So if we have a look at the silver chart to begin with, we can see that we traded up to 89%, which we drew in yesterday from the high down to the recent low where we've got the green line. The bounce back stopped at 89, and then overnight the market's been hammered, which you can see there. But it's failed to sell off. It is now back towards the low of yesterday. The demand for silver from China is increasing exponentially. And this is why I think we're starting to see the silver price actually hold as it just falls out of bed as I'm speaking to you. Wow, look at that go. See if they can bring it back off the 31.5 there. Looks like they're retesting the market. That's unusual to see in the alert because it barely moves until 1:30. So something's going on there. They're trying to get the price down, obviously, for the JP Morgan short. Anyway, yesterday afternoon, the market down. There's your 130, and then the market back up off this to the high of the previous day. This is an 89% retracement, and since then the market has started to move down. What will be interesting here is if we draw in from here to here and see if the market breaks the 89 and the 200 MA, and also the S2 is where the support would be. If prices are forced lower, down towards the $31 per ounce, which it seems to be holding. As long as it holds above 30, get on with it. Simple as that. But eventually the shorts will lose, given what's going on in the background. If you listen to the interview the other day, and there's another one that was sent to me as well about the demand for silver in China from a Chinese investor speaking of it as well. So I'll link that in the description as well. In the gold market, a bit of retracement yesterday and overnight. It's just consolidating at the moment. We just draw in a retracement here because it's interesting to see the market down to 89%. Let me just expand this out a bit, get rid of a few fibs so you can see. Let's get rid of the upside at the moment. And if we try and remove these delicately, let me just get rid of that one as well. You'll see that the market traded down to 89 overnight in the daily. I've deleted the wrong one, of course. So yeah, down to 89. If we look at that in the 30-minute chart, you'll see it a bit more clearly. So down to 89, which is the S1, and the market holding there at the moment. So a quick look at the gold-silver ratio. And this is a monthly chart of the gold-silver ratio. So you can see that we've come down to some sort of support there to the left, going all the way back to here. Let me just get the right tool. There we go, to there. So let's have a look at this. What we're looking at, the low 73.08. It's back to that one that we looked at yesterday, and the market currently at 74.14. So don't be surprised if we get a bit of a pullback in silver, and also the gold-silver ratio moving back to the upside. Let's switch to the daily charts, and you can see there that it's starting to try and come back off that level at the moment. Right, so have a quick look at yesterday's trades and an overnight look at where the German DAX is. So yesterday's open saw the market attempt to move higher. We then move lower with a sell, the market coming down, and then taken out of the trade with a small profit as the market moved back. It was a conscious decision because of the major support to the left. So as the market came back, take the profits off the table. Market bounced, no surprise there, back through the low. We then had another short, moving the stop to break even, then trailing it down. And of course, you've got an area where the market had already found support. We've also got a second attempt to try and break the support to the left and further to the left that we saw in the previous trade. So the market then coming back and then moving, as we can see, back to the BRN, sideways, failing at the BRN, the psychological level, and the 20 bar moving average, and trading down to the S1, and then move trail the stop down, or take the money at these areas of the pivots like we see there, the market being taken out, 47 points as it started to come back. Bounce back, sharp bounce back, market moving to the upside. This one's a loss as we had a bounce, shorts being squeezed, and then we had a more sustainable trade that you can see there up to the resistance to the left. and also the scalp, and then making no more progress, so just a couple of points on that, and then sideways through the mid-morning, and then again declining with the Dow in the electronic session for that market, and then in the afternoon we had a buy and a sell, but eventually the buyers winning out there, moving the market to the upside to the scalp level and also the S2, and then just trailing this up. You can see there, nice trade of 50 odd points at one point, and then the market coming back. So let's just move forward to the next. Again, we had another buy, market trading up to the scalp, then reversing sharply, followed by a sell which didn't happen, and then another buy which didn't get filled, and then prices coming back again, offering another potential sell but didn't get filled, and then we go into the after 4 p.m. Trading session there. Right, let's have a quick look at the overnight in the German DAX, and you can see that we're still below the low. We're currently hugging the 18,400 level, or attempting to try and stay, but so far the market's failed at the 20 bar moving average, and is not having a good time here either at the moment to try and stay above this level. So what I would be doing here, if we just spread this out and reset the charts, I'll be looking to see if the market will hold at 89%, just as it did. If we look back here, from here to here at 89. So if the market can't hold this 89 to the left, let me just delete this, hold this, then we're likely to see a retest of these two levels, and then prices moving lower. So if that's the case, we've got nothing down to the next 50 points, but just below that we've got support at 18,340, and then below that we're just going to have the S2 and the S3 if there is a decline. However, if the market can manage to get back above the 50 EMA, the close, the low at the close, and the 200 MA, then the DP will be on the cards there. So there we go, and that's the daily chart heading down to that 50 EMA that we've spoken of before. And that 50 EMA, by the way, if we just have a quick look there, is down at 18,326, and if you go to the 2 minute to the S2, you will see that that is at 253. But let me just double check that again and make sure we've got the right number. That was 326, isn't it, not 236? Yeah, so just below the S1, where you'd expect to see some sort of support coming into the market there. Right, that's it for this one. Let's see what the markets do today. They're certainly heating up a bit, and there's a lot of volatility around during yesterday. Let's hope that is maintained. It's just a nice sort of volatility as well. And see if we can get a few more quid out of the markets as we did yesterday. So have a great day, and as ever, thanks for watching. See you in the